Welcome back, folks. Another amazing week in the markets. We finally have tapped into these equal highs on the daily charts. A nice large range day on Friday and a very nice end to the end of the week. I had a pretty typical week, nothing special in terms of my business, but I was able to close out the week with just over 90,000 in profits. Did overtrade quite a bit there. You can see the scroll bar here. So I need to kind of look at that. And this week provided a lot of lessons for all of us. I'm also just a student of the market, always learning new things, seeing how the market evolves and where I can improve and refine my own trading models. Okay, and those results are not typical, not implying at all that anybody can achieve those sets of numbers. It all comes down to your own availability of capital, your own account size, your risk tolerance, your own discipline and psychology, experience, and being able to read the charts. Okay, so there's a lot more in trading than just clicking the buttons to buy and sell. Okay, now I invite you to go back to my video that I did on the analysis on where the market's headed. It's this video here that I'm referring to, okay, because there's a lot of good lessons in that video. This one here, okay. So look at the title, because obviously there's going to be more videos posted and the screen will be different when you come back and look at it. It's this one here that says how to predict huge moves. And I think that's the 15th of August, has a date there in the title, okay. And that video talks about what I was expecting the market to do. It also talks about the exact level where I was expecting the market to provide a short entry at 2462 on Thursday, which we got as well. So have a look at that video. I invite you to go study that video. Okay, look at the charts, all the different things that I mentioned that the market could do. And I did say in that video that overall, when we had this move down on that Wednesday, that I was still bullish, looking for these equal highs on the daily charts, because we just come into these daily order blocks. And that's what I want to focus on today in this video. I want to bring us back to the basics, the ICT 101, where we're just, let's simplify this. Okay, there's nothing new, right? I haven't invented any of what I'm talking about. Okay, I trade ICT principles and have taken some ideas from other really good traders. And so all this is done on Wednesday's come back down into, these two down candles are coming down into this daily order block, okay, that I've mentioned when we moved down here in that last video that I did, okay, and also rebalancing this large range candle that we had on Monday, okay, that's all really that this was doing, okay. Now, on the 4-hourly chart, I spoke about the fact that this was a bearish signature and we were looking for shorts, and we got that short here at this crawl, okay, and in the video that I've referenced, I provided an entry potential for that short on that Thursday. Let me just go and find out where that is. Okay, and that was here at that 246 level, this 1 hour fair value gap. And you'll see me talk about this on that video, and that's where I was expecting the shorts to come in from. But that's just, as I said previously in my videos, that's just an indicative point of interest. You've got to then, on the day, look at how the day's evolving. Okay, and as I've already explained the entry on this, on a 1 minute chart closer to the news announcements, we got the entry around that level there. Okay, so I invite you to go and watch that, because that's going to really give you some more insights, because you've got to go back and rewind and look at the videos from the past and check out the charts and see what I've said, what's happened, and for your own analysis, try and work out how the week has evolved. Okay, so even on a 4-hourly chart, if we look at what the market has done, and this is where we bring back our trading back to the basics. Okay, so going back to the daily chart, we have on Wednesday these two down candles coming to these bullish order blocks on a daily chart, right? These down candles, okay? In particular, this last one here, because this Monday has closed above this down candle, okay? Making that a validated bullish order block, okay? That's what we come back down into, as well as being trying to rebalance the market. At that point, I mentioned that we hadn't fully rebalanced this completely, although I did say it was enough to balance from here to here, okay? I did mention that there is, that because on the 4-hourly chart, we were bearish to look for the short from the level that I spoke about on that video. I invite you to go back and watch it, okay, at that fair value gap on the hourly chart, okay. And now, if we jump down to a 4-hourly chart, what do we see the market doing? Okay, so there's the two down candles where we established a bearish bias, okay, that I've spoken about, so I'm not going to speak about that more today in this video in detail. We had to crawl up, and this down candle, what's it doing? It's going to this bullish order block on the 4-hourly chart, okay. So if I put a line there, you can see it's tapped right into that bullish order block and immediately rejected. We've got no closure of that candle below this swing low, okay, which is different to getting a closure from these two down candles under this swing low, okay. In this move down, complete rejection of that swing low into a bullish order block, okay. Notice how this down candle is connected to this down candle that also took liquidity, okay. So that's, and there's all these fair value gaps there as well, okay. So if we just mark this out, there's a fair value gap between those two, okay, and that down candle is connected to this down candle, which is also a bullish order block, and that has taken liquidity, okay, this is taking liquidity, okay, and fair value gap here, making that a higher probability bullish order block. Also, this down move takes out this liquidity, okay, so all those things need to be taken into consideration, okay, and from there, we start to move up higher, and eventually the target is going to be these equal highs, which are the daily and weekly equal highs, and the higher time frame draw on liquidity, okay. Let's jump down to a 15-minute chart, and I want to bring us back to the basics, okay, that's what this video is all about. I did post a Twitter chart up where I indicated that there was a level of liquidity. So this is where that 4-hourly candle you can see comes down, takes all this liquidity. Okay, this is all that Thursday move down, okay, that I shorted. Okay, that's already posted on Twitter where's that post? This one here. Okay, that's the short that we've done from that level mentioned in my previous video. And I've already gone through this trade, so I'm not going to talk about that in detail. Okay, that's that short, but that's taking out all this liquidity. Okay, balancing this fair value gap and coming to that 4 hourly bullish order block that I've mentioned. Immediate rejection. Okay, this is an impulsive move back up. Okay, then consolidation. Right. Notice that we have this dump. Okay, dump for the pump. Okay, so all these things come into play. You've got to take everything I say and build a model, a strategy around that. Okay, if I see a dump, I'm looking for the pump. Okay, this dump's coming to a key PDRA on the downside, right? That's a support zone, taking out liquidity here, balancing the fair value gap, coming to a bullish order block. Okay, that's what that dump's for. Okay, it's engineered to take out anyone that's already long. It's engineered to entice short sellers. Okay, and get people in the market on the wrong side before the rule move. Okay, this immediate rejection, the fact that we don't close below this swing low, is an immediate, it's a immediate understanding that price is just coming down here for a manipulation and for a objective of balancing the market and coming to an order block to get more orders. Also, look at the number of candles. What have I said about 3 candles? 1, 2, 3. I love any 3 down candles on any time frame where they take out liquidity and or come into a key PDRA on the downside. I've mentioned that on 1 hour charts, 15-minute charts, hourly charts, 4 hourly charts, and daily. Okay, so any time frame where I see 3 down candles like this, okay, I'm thinking manipulation. I'm thinking, why is it coming down there? I'm thinking, what's here? And then I look and I see, okay, there's liquidity, there's fair value gap, there's order block. Okay, all this coincides with the higher time frame daily chart, right? So everything is in alignment. Okay, so coming back to the basics, we see consolidation. Okay, I did post something on Twitter indicating that level of liquidity. Okay, indicating that there would be some potential repricing higher. I was just looking for these highs here. Okay, in the back of my mind, I do have 2,500 in my head, but not expecting that to be taken in one day. I was expecting that maybe next week we get up there, but that's fine. It can happen in one day. That's okay. It hasn't taken us completely by surprise because we have done some high time frame analysis that's already telling us the daily highs, those daily equal highs, which is also weekly draw and liquidity, is a potential. Okay, now so the market has come back down after this consolidation and taken all that liquidity that I mentioned. Okay, so if I just draw that line again, I'll see if I can draw it here on this, but it's a bit lower. Okay, so that's kind of where I drew all that liquidity, and this down move here, okay, has taken that. It did not come into a gap that I thought it would come back down to balance, but again, that just tells me that it's just coming down to grab liquidity, and it wants to move and reprice higher quickly. Didn't even come down to take out any of these equal lows or this fair value gap, which I do believe will be a level sometime next week. But the time here is important. Okay, look what's going on here. We're coming down here when this is now a big consolidation. 2:30 a.m., which is a key time in London, comes down, pumps down. Okay, we're now in that a new hour and the halfway point of that hour. Okay, so I've mentioned these times previously. In London, it's 2 a.m. or 2:30 or 3 a.m. or 3:30. Okay, or even 4 a.m., which is the last hour of London. Okay, so we're getting a dump. Okay, another dump for a potential pump. Okay, now if I jump down to a 1 minute time frame, this is pretty clear on a 1 minute time frame. We got that dump. Okay, let me find, where are we? Let me find that on the charts. So there it is. I'll just scroll back to where that is, and you can see how the market is from 2:30 a.m. See, I get in and look, I come to the chart a few times, okay? 2:30 a.m. is when I'm going to look at my entries. I come to the market and I see we've kind of crawled up, and I see 2:30, we're up here, and I'm thinking, there's really nothing here. Where, this is just a crawl. What's going on? I see that there's liquidity below, and I just sit and wait, and I look at this. It's just crawling, and I know that this is coming down to some sort of key level, which is when I identified that level of liquidity that I posted on Twitter, okay? And then I see that we're starting to, this is now in that 3:30 a.m. candle, and I see that we're getting a nice reaction. Now, I didn't take this long, okay, but this was a perfect long entry from this level with this immediate pump up, okay, at a key time, 3:30, okay? So just jumping back to a 15-minute time frame, I'm not saying that we would have been able to pick that, move. Let's just get back to where we are, because I want to bring this back to the basics and show you how easy this really was on a 15-minute time frame. Just coming back to ICT 101, okay? So we have the dump. Let's say we missed it. We didn't see it. That's fine. We now see this displacement that's taken out all this liquidity on the top, okay? After taking out liquidity on the bottom, this range, all these candles have been taken with this move down, okay? Now this has come down into where? This order block, okay? Coming down to the basics, ICT 101. These 3 down candles, again, 3 down candles, 15-minute chart, has taken all that liquidity that I marked out on that Twitter profile here, okay? All this liquidity was available, okay? This move down has taken all of that. That's your bullish order block now. Now we get the market move above all those 3 candles. That validates that those 3 down candles as one big bullish order block, and this dump down into that bullish order block can be a long. Now, you may not see that, okay? And that's okay. This is all coming down at a key time, 3:30 a.m. London. Get nice displacement, okay? Nice displacement. Move along. Again, this is your order block, okay? Where's this coming down into? Let's have a look. Is it coming down into this candle? No, the high there. No, this down. So you've got to look at the down candles, right? Because they're all order block. They take liquidity. So there it's coming down into that, making that your order block, okay? And then this is now these 2 down candles coming down to this order block, okay? So we're just following the market, following the bullish order flow, okay? Now we get displacement, okay? This is now 7 a.m. New York Open. What are these 2 down candles doing? Coming down into these 2 down candles, okay? So if not those 2, you can connect it to this one. So you just got to find out which. Let's have a look. Missed that one. So it's this one, okay? There's your bullish order block coming into that one. Okay, these two are connecting to that one. Okay, these are bullish order blocks as well. There's a fair value gap here, 7 a.m. ICT New York Open. Okay, movement up. Again, you may not see that, you may not get that. I don't know why you wouldn't get that. You should be looking at the charts at these key times to get displacement up, 2 down candles again into the order block, fair value gap. Okay, and you get another displacement. Okay, this is now that 7 a.m. candle again, displacement, 2 down candles, order block, fair value gap. So many opportunity there to get in on this move up. Okay, as you're just watching the market, you can see we've come into the key higher time frame bullish order blocks on the daily chart, on the 4 hourly chart, probably also on the hourly chart as well. I'm just showing you here on the 15-minute chart, and then we rocket up and go through all the highs. Your target's going to be the daily highs. Okay, so these are where the daily highs. Let's actually get on a daily chart and mark that out. Okay, so this is our daily highs that we should be targeting, because previously we've already taken out this daily high, so that's the current level, that's the high on the chart. So let's jump back down to that 15-minute time frame. So when we're down here, okay, in particular, this is open of New York, 7 a.m. into these 2 down candles. Clearly, order flow is bullish. Okay, that's a nice move from that entry on that order block up to there, to those highs is over 160 pips. That's to the exact high. Okay, you're going to push a bit further to get people enticing to breakout traders who trade the long breakouts, get them in the market, and also to enable stops. There's stops above those levels, so you want to go beyond that level slightly, maybe 30, 40, 50 pips. Okay, now the market went quite beyond the level. Let's have a look. Let's just measure it beyond that daily high up to more than 240 pips. Okay. So I'm just bringing you back to the basics. Let's not make it any more complicated than it needs to be. ICT 101, there's nothing new. This is not something I've invented. This is basic ICT 101 bullish order blocks. There's lots of other signatures that we can use as well, but it's any type of bullish signature. Bullish breaker, fair value gaps, bullish order blocks, liquidity. There's a whole range of things that I could talk about. I just want to bring it back to the basics. The ICT 101, straightforward, simplifying your trading, looking at high time frame, dailies, 4 hourlies to identify the directional bias, and then using the lower time frame, like 15 minutes, okay, to identify and confirm bullish order flow, just using the basic times, okay, 7 a.m., this is the New York Open, okay, and key bullish signatures with fair value gaps to look for entries. It's tiny risk, right? If we're getting in, this is the 7 a.m., let's just measure out the risk and reward profile on this trade, okay, this potential trade, right? It's in the past now. We're going to enter as this market's moving down after 7 a.m., after getting this displacement, closing above these 2 down candles, making those 2 down candles a validated bullish order block, okay, so we enter somewhere in this, around this zone, okay, stops are going to be just under your bullish order blocks, okay, maybe you just want to bring this down a bit, okay, let's just put it at I'll put it at the high of the open of that candle, and you're targeting up at the high of the day, even though it's going to go beyond that because it needs to stop people. It's not just going to go to that level. Okay, that's a 3.7 risk to reward ratio. Okay, so they're the things that you've got to try and understand. Okay, don't make it more complicated than it needs to be. Now let me show you something, and I've showed you this before, but I want to show you the wow factor and how easy this really could have been. Okay, so I was already targeting 2,500, but on this day, okay, I knew with high precision where this market could be headed to. Okay, on this dump day, right? And all I'm doing is I'm going to take, and I've shown you this before. This is nothing new. This dump, okay, I'm going to show you 2 calculations, okay? First thing I've mentioned before, when you identify the manipulation, okay, this is the New York manipulation of Thursday, okay? This midpoint should hold price, okay? That should be a level where price is supported. That's how you know that what you've done here as a way of identifying the manipulation is correct. When you see the midpoint of that level that you've identified as the manipulation to be correct, you need to see the midpoint of that hold, which it does, okay? Next, I've shown you this previously. I think I've still got the settings on. You want to expand that range, multiply it by 2 from this high to get where the market might be headed, okay? Where do you think this number is going to come into, okay? Let me show you. There you go. The exact high, 2498.47, which is exactly where I was expecting the market to go, which is at 2,500 that I've been calling for a few weeks, okay? Now, anything beyond that, to me, this is just a stop hunt. Okay, I do believe that is the high. This now is, in my view, a stop hunt for anyone that's already short from that level. I do believe that this is already the manipulation. I do believe that Monday will come down. Okay, that's not a trade recommendation. Okay, that's just my opinion and my analysis. Okay, and I want you to monitor the market for your own learning experience. We're learning about price action. Okay, why do I feel this is a stop hunt? Because it's just a crawl up. It's not an impulsive move. Okay, so I do believe that at some point, most likely Monday or at least next week, we should get back down to these lows. Ultimately, I'm going to be targeting these equal lows, this fair value gap down here. This is just too clean for me. Okay, so I do believe that at some point, number one, objective will be back into these lows. Okay, that's a bit over 300 pips. Again, not a trade recommendation. Okay, you're here to learn about price action. I want you to monitor this chart, learn why I'm saying this is a potential stop hunt. Because number one, I have a predetermined calculation of a target at this level, which I believe to be accurate. We've hit that right to the dot. I mean, we've had reaction from there. Notice that. Also, on a 15-minute chart, we closed below this swing low. Okay, this down candle is your bearish breaker. This is your bullish order blocks. 3 up candles move down. We should have retraced and moved down. This is to me the manipulation to stop hunt anyone that's already short from here or short from seeing here. These close below this swing low. Okay, to me this is manipulation. Manual override in my opinion. Okay, again my opinion, and I think that this is kind of just a stop hunt. and to get people and other breakout traders into the market, okay, as a manipulation, okay? So I'm going to be looking for repricing lower early next week. And that doesn't mean that Monday morning I'll just come in and short the market. That's not how I trade. You know that's not how I trade. I look for specific setups at specific times. I may not even trade it even if I like the setup, okay? It all comes down to how, what I see, how the day's evolving, okay? So for me now, let's talk about what's next for this market. I think that, again, just like Monday, okay? Monday, a big, huge range day that closed above Friday's high, meaning that has closed in breakout, okay? And Friday is the same. Friday, big range day, closed above Thursday's high, meaning this has closed in a breakout. There needs to be a pullback. The market's now out of balance. So I'm expecting some kind of a pullback, okay? These are still bullish order blocks. There's no reason for us to, there's nothing on this chart is suggesting that we're going to reverse. Sure, we can have a pullback, and these are the two down candles right now that are the bullish order blocks. And, one would expect and assume that we're going to transfer down to these bullish order blocks and rebalancing of Friday's, the market back to Thursday's highs, okay, into these two down candles, and then continue the move higher from that level. Right now, that's what the chart's telling us, okay? So we can only go with what the chart is telling us. However, these order blocks are at very premium pricing, okay? So we need to see what the market tells us on a 4-hourly chart, similar to what we saw on Wednesday, okay? If I go back down to a 4-hourly chart, for us to be thinking about a reversal or a deeper pullback, we need to see evidence of that, okay? We're at all-time highs at the moment. This is a 4-hourly chart that we saw previously, right? We want to see a swing low broken, displacement, gaps, and a engulfment of a bullish candle on a 4-hourly chart with displacement, okay? To me, that's what we need to see for any indication of further weakness. Right now, this is quite bullish even on a 4-hourly chart, okay? This move down has done what? I'm going to tell you that in a moment. I want you to think about that. I've already spoken about this in today's video, and I'm hoping you're learning what I'm saying here. What has this move down done? Look to the left. Are there any down candles that have taken liquidity that this move down has come into? Yes, there are, okay? Have a look at this down candle, these two down candles. Okay, that's the bullish order block on this 4-hourly chart. Okay, so if you were watching this market, this move down to this bullish order block, okay, could have been your entry, right? If you were watching the market and you saw that setup, at this point you've tapped into the higher time frame target. So if it was me personally, I probably would not take that because I've already hit my take profit level, which is around that 2,500 level, and it's a calculated target as well with high precision. Okay, but if we did trade that from that 4-hourly bullish order block, then that would also have been a nice move up for over 200 pips, okay? Coming back into the high of that particular 4-hourly candle, which would be the drawn liquidity, okay? Obviously, we went higher, but you don't know that. Right now, all you see is this high when you're down here, right? When you see this, you only see this high. And when you come down, that becomes equal highs. But again, you've hit your take profit. If it was me, I've hit my take profit, and I would expect that could be the pullback to stop back into these equal lows, okay? They are the equal lows on that 15-minute chart, okay, that I referenced earlier in this video that I do believe we need to get back down into. Okay, so if we go back down to a 15-minute chart, that's those equal lows there, that's that fair value gap, okay? Not saying that is the next draw on liquidity because we don't know yet, right? Because right now, daily charts is bullish, okay? And these are the order blocks, but that is a level that I will expect the market to at least come down sometime next week. I really want to see a 4-hourly change of state of delivery, okay, as I've explained in the video, for me to really think about a change in direction or think about a bearish bias, but I do think we need to pull back at least, okay? So I hope the video is useful. Go back and rewind and watch the video. Also watch the video I referenced earlier because there's a lot of good nuggets in that video. You've got to study the charts, okay? I repeat this all the time. If you're just watching these videos, you're not going to learn because I went through the same phase many years ago, and it was only until, it was only when I stopped the videos, rewinded the videos, went to my charts, looked at what the teacher was telling me that I started to understand what was being mentioned. You've got to look at it on your own charts and study the charts, study the entry, study the exit, study what I'm teaching you here on these videos. It's all about price action. You've got to learn price action, okay? Hope the video is useful. I will now talk with you in a future video.